Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Nvidia becomes the first company in history to have reached a $4 trillion market cap. Plus, a new record for a private giant too. SpaceX is in discussions to sell shares that would value the company at $400 billion. And Apple thinks it's too big to tariff. Now, that's according to White House Trade Counselor Peter Navarro. This is wider trade questions remain. But first, we check in on these markets, which actually managed to shrug off a lot of that trade anxiety on the day. And the Nasdaq up 0.2%. We were trading in excess of 0.5% higher, led by key names such as Nvidia. Let's just dig into what's happening as we await big bond auctions in the United States. We try to digest what's happening in terms of trade. I am seeing a $4 trillion market capitalization for the first time in history. We touch it, we pull back down a little bit, but Nvidia is very close to it as we stand out. And this despite the world's biggest market cap erosion back in February after the DeepSeek anxiety. They pulled back and they're up 20%. So far in 2025. Move on, though, and have a look what's happening with Apple, because from a points perspective, it is the big drag lower on the major benchmarks today. Apple offers, you'll see, by more than a percentage point. This as we hear from Peter Navarro, of course, who whispers closely in Trump's ear around trade, that he thinks that Apple sees itself as too big to tariff, but they are moving fast to change this. Nevertheless, the anxiety remains around Apple and the exposure to certain trade tariffs still to be decided and announced. Bloomberg's Balance of Power host Kayleigh Lyons has more. We heard from Peter Navarro, who is on another network earlier today. But bring us up to speed with just where we stand in terms of the new deadline of August 1st.
Well, President Trump suggests that deadline actually isn't new, Caroline. He said yesterday that it's always been August 1st, though we thought today, July 9th, initially was the trade deadline that at least countries were facing in order to make trade deals with the United States. Obviously, that has been punted back a few weeks. The president, in addition to tariffs on countries, is still teasing further sectoral tariffs that could affect companies like Apple when it comes to things like semiconductors, for example. And then there's copper, which he surprisingly announced yesterday. Not necessarily the tariffs itself were surprising because a Section 232 investigation had been opened into copper, but the timing and the scale of the tariff were what caught us a bit aback. 50%, and the Commerce Secretary Howard Lutnick says that could be effective at the end of July or also on August 1st. And you think about a commodity like copper, what that could do to supply and demand dynamics, knowing right now the U.S. doesn't have adequate supply to meet the growing demand for copper because of the role it plays in things like, for example, powering artificial intelligence, or rather the data centers that do that work and the facilities that generate the power for those data centers, the actual infrastructure to get that power to data centers, the construction of data centers that require it for things like cooling systems or their circuit boards. All of that requires copper, and copper could either be harder to come by or potentially more expensive when these tariffs go into effect. So that obviously is one area of the market that has been roiled by tariff news in recent days, and we're waiting potentially for more tariff news, Caroline. The president posted on True Social overnight that this morning he would be announcing 7 countries in regard to trade, assumably, we assume would be letters like we saw earlier this week when 14 countries had tariff rates essentially set for them that will take effect on August 1st. No news yet on this front, but he did say 7 will come this morning with additional letters to come later this afternoon. So we'll be on watch for those essentially all day here in Washington.
The weaving of politics and technology, so expertly done. Thank you, Kayleigh Lyons. Now, let's just admit that talk of tariffs are probably going to be consuming much of the conversation over the annual Allen & Co. retreat in Sun Valley. But so, too, is a competition in AI, with companies like Meta actively recruiting top talent from across the industry, including from OpenAI. Now, despite that talent war, CEO Sam Altman says he remains confident in his team.
I think we have obviously we have an incredibly talented team, and I think they really love what they're doing. Obviously, some people will go to different places. There's a lot of excitement, I guess we could say, in the industry, but no, I think we feel fine.
Joining us now is our very own Ed Ludlow in sunny Sun Valley, Idaho. So, thus far, no awkward meeting between Altman and Zuck has been witnessed, right?
No, people I've spoken to haven't witnessed one, and we haven't actually seen Zuckerberg arrive yet. But that was what Sam Altman said, because he was asked, his expectation is that he will see Mark Zuckerberg and that he's looking forward to it. He kind of elaborated on what he discussed on the podcast with his brother a few weeks back, which is he feels the strategy on talent is to be mission-oriented, to have the great research lab and a great company. It was kind of a reference to that quote that he had about being mission-driven, missionaries, not mercenaries. But again, we're waiting for it to happen. I do know that it's a big point of focus this year here at Allen & Co.
Well, a big talent question has just arisen as well. A movement of Linda Yaccarino out of X. She's posting on the social media platform saying she's stepping down as the CEO. Ed, what do you make of it?
Yeah, I mean, in the post, she's talking about the turnaround job that she's done without sort of giving any specific metrics. The lower down, there's a reference to XAI. Right, and it's really important to remember that post-March, when X and XAI essentially merged under XAI Holdings, that the structure of that company changed. There's a lot of emphasis on how X, the social platform, provides a moat for XAI, the developer of large language models and generative AI tools. But Elon Musk, this is the latest person in his orbit to step down or leave. You'll remember the reporting about Omid Afshar leaving Tesla, other senior executives in other places. So very interesting to see what happens big picture with X and where it fits in alongside XAI, rather than just being an ad-based social platform.
And let's talk about orbits and Elon Musk a bit more, because you have a great scoop out on SpaceX, working with colleagues, talking about how it's going to be perhaps a record-setting valuation of a private company.
So SpaceX does tend to do a secondary or tender every 6 months, and they use this mechanism where it's concurrent with a very small primary. In other words, they sell a very small number of new shares to set the price and the valuation. And what we're hearing from sources is that valuation is now above $400 billion. And it's astonishing, right? Like, it's a milestone, most valuable private startup. But, it's also in the backdrop of Elon Musk and the President of the United States. SpaceX relies heavily on contracts from the US government, defense apparatus, but it also dominates commercial payload to orbit. And that valuation continues to climb with a really heavy emphasis on Starlink. A big part of it as well, of course, is about employee liquidity and talent. Because there are people that have worked at SpaceX for a really long time, and stock is a big part of comp. Loads of people watching this show will know that. But it continues to go up, and that's super interesting.
It is still validation in Elon Inc., it feels at this moment, Ed. But what everyone's going to be talking about where you sit is also a bit of M&A, and a healthy amount potentially going on in the media landscape. Talk to us about A&E.
Yeah, I mean, this is the history of Allen & Co. and Sun Valley, right? TMT and M&A. And the news that we've had in the last 24 hours is that A&E, which is the joint venture between Disney and Hearst, is available for sale. That's kind of like the cable channels, including History Channel. Shout out History Channel to those that watch it. Bob Iger walked past and we asked him, can we talk a little bit about A&E? And he said, I'm not going to be talking about that right now. But it is some property up for grabs. And then you have Warner Brothers Discovery that's on a path to split between a pure play streaming business and a pure play studio business. And we did catch up with David Zaslav, who said, look, we're on track. There are no approvals needed. We aren't ready to talk about the debt side of this. But all of that indicates that in this space, some stuff might happen. And I think that's what people are going to be talking about a lot in and amongst all of the seminars and coffee stops in the next few days.
A history lesson on the History Channel and the history of Allen & Co. Ed Ludlow out in Idaho. Love catching up. See you soon. Meanwhile, let's dive into all of this with Scott Ladner from Horizon Investments, who, of course, is taking a temperature gauge of the markets right now. And Scott, we're looking at maybe a little bit of M&A coming to bear. We're seeing phenomenal valuations on the public market with a new $4 trillion company, if we can retain it back for Nvidia, and that $400 billion private valuation for SpaceX. Can we sustain these sorts of valuations, Scott?
Hey, Caroline. Long and short, yes, I think we can. And the reason why we probably can is because these companies are growing into the valuations that the market is placing upon them. This is not like, not like the 90s where those companies really sort of got ahead of themselves and weren't making enough money to justify the valuations ultimately. But these, this generation's tech companies, have ROEs in the 30s, and that that is a very sustainable kind of valuation metric that we can use to say, yeah, this is pretty sustainable right now. Like we're not in bubble territory anywhere close to it.
I mean, return on equity looking still healthy and not too eye-watering. Scott, will that be vindicated in the earnings season that we're about to get? Will Microsoft, will some of these, particularly the hyperscalers, be able to commit to the spending that drives Nvidia yet further higher?
Yeah, that is obviously the trillion-dollar question. Like, do we get continued growth and continued upward pressure on those ROE kind of metrics? You get the ROE expansion by having additional profitability, additional margin expansion, and just overall just better execution on the business side. And if these companies can continue to do that, then there's no reason why we can't be substantially higher in a year from now in many of these companies than we are right now. Our expectation is that that's going to continue. There's no reason why it really shouldn't at this point. We are still early stages of the AI revolution. And that is our expectation currently.
I mean, I guess the extraordinary matter of all of this is, of course, we saw the biggest sell-off ever in a market capitalization of Nvidia just in February because of the worry of DeepSeek. But we also have the tariff anxiety that just doesn't seem to impede its valuation. Is that something that could knock off valuations, or do you think we're getting numb to tariffs?
We're definitely getting numb. I mean, look, the market is not trading like it used to in April based on the tariff headlines. You see there's just sort of a diminishing return towards the shock that the market is able to absorb with these. Because now we sort of we think we understand what the playbook looks like. Playbook looks like, talk tough and then eventually find some way to get a deal that's acceptable to everybody. And if that continues apace, then there's no reason why why the market can't sort of sustain these types of levels. But getting comfortable with the way that the tariffs are going to end up going and figuring out the market, frankly, is starting to figure out that there's not really an alternative still to Nvidia and some of those chips, despite despite some of the DeepSeek stuff. And that's why we've recaptured these all-time highs in valuations.
It does seem to be a story of AI winners and then the laggards. And where talking tough has really got hard today is on Apple. Once again, Peter Navarro calling it out, saying they think they're too big to tariff. Are we just going to see more money pile into the infrastructure layer? Or at what point are we going to start to see companies winning out with the application of AI, which thus far Apple doesn't seem to be on top of?
Yeah, we think that's probably a 2020, like late 2025, early 2026 story. As we move from the the makers of the stuff to the users of the stuff, and that's probably going to be the most important investment call to make as we come into next year, is like figuring out which companies and which sectors are actually able to use the AI technology, which is amazing, to increase profit margins, to increase productivity. And that we're spending quite a lot of time on that here at Horizon, and it's something that we're actually pretty excited about. But the focus and the intense focus we've had on the infrastructure side, it's probably not going to go away. It's not going to be diminished, but it's going to broaden out towards more towards those users and some of the ultimate winners in the space, which are always the users of the technology rather than the makers of the technology.
I mean, I know you say it's still early days, but can you give us an inkling of where you're getting most excited about? Is it the healthcare space? Is it elsewhere?
Healthcare is definitely one of the top of the mind in terms of the people that can use this to just really speed up the drug development. Is there like an obvious application for some of these things? I mean, the exciting thing, Caroline, though, I think is we don't really know what's around the corner. I'm not smart enough to figure out like what the next shoe to drop is and like which companies and sectors are really going to take, especially like the agentic AI and into the next level. And so we are spending a fair amount of time trying to figure that stuff out right now. But I don't know what I don't know, and that's actually some of the most exciting parts about this. Is really have to stay front-footed and do the research and just listen to what you're seeing.
And Scott, therefore, do you take money out of prior winners to allocate to the future ones, or are you taking out of just lagging industry groups that you just don't want to be allocated to at the moment?
I think it's more you probably do take some out of the infrastructure plays. You take some out of the prior winners, some out of the Nvidias of the world. But like as I said earlier, Caroline, it's more of a broadening play. So I think you actually increase the overall allocation towards AI in your portfolio, but you're taking out some of like the Nvidias of the world. You're also taking out of like industrials. You're taking out of like utilities. You're going to take it out of some of the more boring like staples types of things. You probably just want to allocate out of those types of sectors and just overall increase your breadth of your AI in your portfolio.
Scott Ladner of Horizon Investments, Chief Investment Officer. Thanks for pushing us forward. We appreciate it. Coming up, Samsung unveils a slew of new foldable phones. More on that next. This is Bloomberg Tech. It's time now for Talking Tech. And first up, Waymo's first self-driving taxis have arrived in New York City. But full autonomous operations remain pending regulatory approval. Now, in the meantime, the company is collecting data across the city with safety drivers behind the wheel as it awaits to begin self-driving tests. Plus, a California lawmaker makes another push to regulate AI in the state. Senator Scott Wiener has introduced a bill that would require companies developing certain AI models to publicly release safety and security protocols. The bill is expected to go before a California Assembly committee later this month. And Samsung has unveiled its latest smartphones and wearable devices at its annual Unpacked event. It's announced 3 new foldable devices, each thinner, lighter than previous iterations. The company also revealed a new line of upgraded smartwatches that use Google's Gemini AI. Now, for more on Samsung and plenty elsewhere in consumer tech, Bloomberg's Mark Gurman joins us. You haven't had your hands on these things. They look pretty good. What do you make of the announcements from Unpacked?
I think these are hugely significant announcements. What Samsung is trying to do here is take foldables mainstream. So 2 main levers they've pulled here. One, they've widened the display. So they've made it less narrow. This is an older Samsung foldable right here. And you can see how narrow it is. And if you're used to working on an iPhone or a regular Samsung phone, the narrow form factor makes it quite difficult to use. So they've expanded it. So now in the closed state, the new foldable Fold, this is the $2,000 model, feels like a normal candy bar phone that you can then open up to have even more screen real estate. The other thing they've done is they've released a sub-$1,000 foldable. This is a new version of the Flip. That's their vertical phone. And that price point makes it a lot more compelling and is taking it out of the early adopter price range. And it's interesting because foldables have been popular amongst the early adopter crowd, some of the techier crowd, more of the productivity-focused crowd. But now Samsung is trying to take it mainstream. And really, those were the 2 levers they needed to pull in order to accomplish that. So we'll see what happens. Next year, Apple will announce their foldable, which certainly is going to bring a much bigger spotlight to the category, not only for its own product that they're unveiling, but for everyone else who already has foldables on the market.
And Mark, just spotlight Apple a little bit more for us, because you brought us that news yesterday that a changing of the guard COO is now departing, perhaps not unexpectedly.
It's a blockbuster move. As one former Apple executive told me, the band is dissolving, right? At some point in the next few years, it's going to be Tim Cook left standing with a whole new executive team around him. These are serious organizational changes happening at Apple. There are more to come. Obviously, Jeff Williams was the longtime number 2 at Apple to Cook, but really primary decision maker when it came to product development, which products Apple should launch, what it shouldn't launch, really deep in the weeds on expansion for manufacturing into new areas, obviously dealing with tariffs, obviously dealing with their AI struggles. There's really no sugarcoating it. This is one of the most significant departures in Apple's history.
He led watches, health. What's interesting, though, is Sabi Khan, who takes the reins, has been there, for 3 decades and has been managing supply chain. But who do we look to now, Mark, the new guard that might even one day replace Tim Cook himself?
Well, on Sabi Khan, he has been there 3 decades. He's only a few years younger than Jeff Williams. So you're going to see another COO transition in a few years from now, right? You're going to see a lot of movement on the Apple executive team over the next few years. You've seen a lot over the past few years. We've been talking about this several times. I think we've had conversations about this. I've written several articles on this. In terms of the next CEO, look no further than John Turnus, the Senior VP of Hardware Engineering at Apple.
We keep all eyes on him, Mark Gurman. Always ahead of the curve. We appreciate it. Now, coming up, AI startup Mistral is looking to raise another $1 billion in equity funding. More on that next. This is Bloomberg Tech. A Rivian-backed startup that's developing small EVs is getting valued at $1 billion in new investment from Green Oaks Capital. Now, the company called Also Inc. was spun out of Rivian earlier this year. Also, well, it hasn't revealed specifics, but said its tech platform will be applicable to e-bikes, microcars, and neighborhood EVs. Meanwhile, French AI startup Mistral is in talks to raise as much as $1 billion in equity from several investors, including Abu Dhabi fund MGX. It's all according to sources. For more, we go out to Bloomberg's Mark Bergen, who helped break this story. And just focusing on Mistral here, they've already raised, about $1 billion before in equity, but they're also looking to the debt markets as well.
That's right. I mean, it's a move that we've seen Elon do with XAI. I mean, these are incredibly computational intensive businesses, especially if you're trying to build language models and to kind of keep up with the frontier of OpenAI and Google. Mistral has, I think, tapped the brakes a little bit on that being a direct competitor to OpenAI, but they still want to be in this sort of generative AI model game. That's very expensive, both for, as we've talked about a lot on the show, for hiring engineers, and then it's very expensive for these big data center projects that they announced earlier this year. So that's why we believe they're actually not only raising this equity round, but also seeming to raise probably almost half as much in debt.
Wow, and go back to those data center announcements, because Abu Dhabi's involved in that too. Just tell us about how much this is political in many ways.
I think so. I mean, this is partially, we've seen a bilateral agreement coming out a few months back to the UAE in France, talking about building the biggest data centers in Europe. MGX was part of that. There was a commitment of somewhere between 30 to 50 billion euros in funding for data centers across France. MGX has basically taking a portfolio strategy. If they go through with this deal, we've also reported that they're in talks to invest with Anthropic. They've invested in OpenAI. They invested in XAI. They are getting behind sort of every major player in this AI race. And I believe they're probably going to do something similar with infrastructure. We may see something similar on the energy and on the chip side as well.
It's interesting because we've heard perhaps some pieces, unsurprisingly, within the contracts that are signed when you're giving money is, of course, you can't be sharing information when you're invested in so many of these startups. But if you're looking at Mistral versus XAI or OpenAI, where are those niche? Because they're not more broad anymore.
Right, they're not more broad, and they're not necessarily as commercially successful or building the sort of cutting-edge models. I mean, their niche has been, and their selling point is sort of we are an open-source alternative. We are the sort of sovereign AI. We'll come in and kind of build you these AI services that can live in a private cloud. They're targeting governments. They've started working on defense in France and Europe in a time when sovereign AI is certainly like a marketing term thrown around a lot, but it is something that's become much more politically critical, where countries and companies in Europe are looking to rely on local tech as much as they can.
Is Mistral like the pin-up for Europe right now?
I mean, right now they're certainly the highest. This would make them the most valuable. I think they're probably the most valuable. We don't know the valuation for Wave, which is the self-driving company based here in the UK. I think there's been a little bit of wavering enthusiasm for Mistral. I don't think people have been as impressed with their models, but there's certainly a lot of energy and certainly a lot of investor money tied up with their success.
Bloomberg's Mark Bergen coming to us from London. We appreciate it. Now coming up, can Amazon's extended Prime Day lure more shoppers? That's next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's take a look at these markets that are very close to record highs. We have the Nasdaq 100 currently powering up 0.4%. We're shaking off some of that trade anxiety, and we're seeing some of the key leaders of the pack drivers from a points perspective. Yes, Apple is lower, particularly worrying about tariffs for them again today. But let's look at what is really on the points perspective driving us higher. Nvidia. We have at one point hit $4 trillion in market capitalization. Never been seen before. We're up more than 2%. It's a record high for the AI darling. Amazon also helping contribute from a points perspective. Microsoft too, that's got an upgrade, but Amazon doing well, up 1.3%. And that's as Prime Day is in full swing. We are stretching now over 4 days this year, up from 2 in 2024. It remains to be seen whether that will entice shoppers and sellers alike. This, of course, in the context of rising tariffs and rising prices. Let's get more on the inside track. Jamil Ghani's with us, Vice President of Amazon Prime. And you're really already seeing, Jamil, Adobe Analytics saying that US retailers drove close to $8 billion in online spending on July 8th, up almost 10%, the single biggest e-commerce day so far this year. Is sentiment good, therefore?
Yeah, we just started the event yesterday, so it's very early, but we're really pleased by the engagement that we're getting from our customers and our members. Not only is the event twice as long, so 4 days, as you mentioned, but we're also offering more than double the number of deals that are 50% off or more. That's driving engagement across the millions of deals we have in 35 categories. So we're really pleased, but it's very early, of course.
Why make it 4 days? And how is that affecting the pace of spending, do you think?
Well, we listened to our members, and they told us they needed more time to shop the millions of deals that we offer across our entire store. This gives them that. We're also offering new AI tools to get a more personalized, more targeted experience that allows our members to shop both the needs that are on their list, but also the wants. And you see that in the data already. The top categories that our members are engaging with are health and personal care, apparel, beauty, home, kitchen, and really it's stretching the entirety of the store. And members need time to shop it, and so we've given them double that time.
Needs and wants, that's an interesting way of putting it. We've seen a lot of spend galvanized in groceries, for example, in some of the competitors. Is that an area you're feeling you're having to make more inroads in, really show that you can discount at this particular time?
Grocery and everyday essentials, which is the broader definition we use internally to describe those things that a busy household needs to keep running and, deal with all the things that come their way. And we're investing heavily. That's the fastest growing part of our store. And some of the items that are really resonating with our members during Prime Day already are like Dawn Platinum Power Wash Dish Spray, something that my household, your household likely has it under the cupboards. It's also Crest 3D White Strips, Amazon Basic AAA batteries. It's these essentials that you need for modern life. But it's also the other end of the spectrum. Beauty is a really exciting part of our store. Medicube has a number of fantastic products on sale. One of the top products so far is their Zero Pore Pad. So you can see just even in the data of what members are scooping up in terms of savings, it's stretching from the things you need to do in order to keep life moving all the way to what you would consider more wants as well, things you might have had on your list for a while.
Apparently white teeth needed to keep life moving. Jamil, talk to us about Gen AI, though, because you just mentioned how that's helping it become more personalized. How's Rufus, the shopping assistant, doing? How more broadly is Alexa Plus doing? Because I think it was Adobe, again, saying that we're going to see more than 3,000% increase in the use of Gen AI in this particular spending spree.
Yeah, Caroline, you're absolutely right. We've been investing for years, from the very beginning of Amazon, the beginning of Amazon Prime, which is celebrating its 20th anniversary this year, in all forms of AI. This year, we're bringing Rufus, as you said. Rufus is smarter about Prime Day. Rufus is smarter about your interests and can respond to natural language queries and bring back those deals that match those interests. We also have a product called Interest, where you can go in and with a simple set of statements, you can say, I'd like to remodel my living room in mid-century modern. Please show me deals that are less than $100, and it will proactively make that into the recommendations you see throughout the store. We also have shopping guides for those items that are a bit more considered. I'm in the shopping mode for a laptop for my eldest daughter, who's 8. I don't buy a laptop that often, and these AI-powered shopping guides have been invaluable. And then lastly, Alexa Plus is rolling out. Millions of members have access now, and they're using it to check the timing for Prime Day, but also to get recommendations on deals and to be alerted when something that they've looked at previously is now on sale.
Okay, so you're in the market to help your 8-year-old, but what's interesting is Amazon seems to be in the market to lure more young adults, right? That is such a push right now. Why is that the area you want to make inroads?
Well, we recognize that Prime exists to deliver 3 things. Convenience, savings, and entertainment behind one simple membership. And we hold ourselves to the bar of delivering disproportionate value. Everybody today, and likely always, wants to make a dollar stretch. And for younger customers, that's more true than maybe for most. And so we're reinventing our young adult program. Prime for young adults is 50% off, but now on top of that, we also are offering an evergreen 5% discount that for Prime Day is 10%. So our members can not only avail the great deals across the entire store that we've been talking about, but also add to it 10% in categories that they really care about, like beauty, apparel, electronics. And so we're really proud of that program, that offering to that key customer segment.
See how much they love the LeBron ads too. Jamil Ghani, great to have some time with you. Amazon Prime worldwide. Meanwhile, coming up, we'll dive into how China is building data centers throughout the country's deserts in a bid to fuel Beijing's AI ambitions. This is Bloomberg Tech. China is betting big on AI. We know this. But in a new Bloomberg investigation, we have found Chinese companies driven to build data centers in some of the most remote regions of the country to fuel Beijing's AI ambitions and looking to buy 115,000 Nvidia chips to power them. Bloomberg's Jackie Devolos joins us now for more. So on the edge of the Gobi Desert, a modest county called Yiwu, I think, has massive AI ambitions. What draws them there in particular? Why that spot?
Because this is in the Xinjiang region, and a lot of us know about that region because of the controversy around labor issues, religious persecution, but it's also one of the most energy-rich places in China. It's rich in solar, it's rich in wind, and it also has abundant coal energy, which is needed to power this massive AI infrastructure undertaking, Caroline. It is one of the largest that we've seen come out of China, and in many ways, it's almost, garnering the same kind of clout as the U.S.'s Stargate. This is a huge undertaking. 36 data centers are planned, and 70% are expected to be housed within a single compound. 70% of that capacity. It is massive when you think about just how much AI compute power China needs to kind of get up to speed to the US. But of course, the big question coming out of this story is how will they obtain these Nvidia chips, 115,000, to really get that power off the ground?
That's so poignant because we know that China has energy, but it doesn't have the scale needed to create their own semiconductors, sophisticated ones, as far as we understand. Now, Nvidia did weigh in and have been saying that ultimately this isn't what they believe is currently occurring. They say trying to cobble together a data center from smuggled previous generation products makes no business or engineering sense. So where is this 115,000 Nvidia chips coming from, Jackie?
Well, reporters that put together this story really combed through tender documents, investment approvals, and other reporting that really didn't explain this, not in those documents. And perhaps it's for a reason, because these are banned chips. China is not supposed to have access to them. Since October of 2022, these chips have been banned. So it's not clear exactly how this would occur. But of course, one avenue is through smuggling, and even U.S. officials have said that such a smuggling operation would be too complex. So it is ambitious, but it's not clear just what measures they would need to take. Obviously, the United States has been taking a closer look at other countries where such smuggling could help China, Thailand and Malaysia being two countries. But this is a major focus for the Trump administration, which has really started to ramp up those efforts to curtail China's ability to get access to these chips, Caroline.
Sort of a replacement to the AI diffusion rule. Bloomberg's Jackie Devolos, fantastic roundup. Thank you. Look, let's keep discussing how the US can compete with China's growing AI efforts. We're pleased to welcome to the show Jason Oxman, President and CEO of the Information Technology Industry Council, alongside New America's Senior Fellow, Sam Sachs. And Sam, I start with you because you've been assessing, analyzing Chinese tech policy for decades at the moment. What do you make of their belief system that they could access Nvidia chips like this? Would they? I mean, I know you're about to go out to China for a key AI conference.
Yes, I'm headed to Shanghai for the World AI Conference at the end of the month. And the reality is, both China and the United States are focused on getting the infrastructure necessary to win the so-called AI race. Now, whether it's actually a race is a separate question, but data, energy, computation, and human capital are all critical inputs to this. And massive investment in infrastructure is top of mind for leaders in both countries as they seek to do it. Now, the question of chips is also colliding with the tariff battle. Export controls and the question of whether the Trump administration will loosen its grip on China's access to the advanced technology, advanced semiconductors, is going to be a key question as these negotiations take place.
Let's therefore talk about what the executives are wanting at this moment. And Jason, you represent the most innovative companies in the United States. So how do they think about this so-called competition with China? Are they thinking that they need to race? And where are our bottlenecks more broadly here?
It's very real. And if we go all the way back to the very second day of the Trump administration, you saw a big announcement, Project Stargate, as Jackie mentioned. Companies like OpenAI and Oracle and SoftBank, Nvidia, investing $500 billion in AI capability here in the United States. It's definitely a race, and the primary competitor in that race is China. China has aspirations to compete globally on AI. We need to win the race here in the United States. So what the technology industry is really looking for is an environment that's conducive to investment in the U.S. You saw it with Project Stargate. You've seen a lot of other announcements, Apple announcing $500 billion as an investment in the U.S., IBM announcing $150 billion. The list goes on. It's up over $2 trillion at this point. But there's certainty that's necessary. We got a little bit of that last week with the big, beautiful bill passing and restoring the tax incentives for investment in manufacturing, accelerating the incentives for investing, particularly in manufacturing and technology in the United States. The next thing we need is some trade certainty and a move away from tariffs as a trade strategy and into trade agreements so we can expand that investment in the United States as well.
Well, Sam, weigh in here on the trade negotiations with China in particular, and whether there will be any wiggle room to be seeing what China ultimately wants is access to certain semiconductors. Will that be a bargaining chip that could be loosened in some way?
So a year ago, I was in Beijing, and I heard from interlocutors, we will not come to the table. And this was before the tariff battle. This was just regular tensions. We will not really come to the table to work things out with the U.S. unless export controls are lifted. And a year ago, that was an impossibility. But when the two sides met in London last month to try to get things back on track, we had the Secretary of Commerce, Howard Lutnick, included in the negotiations alongside Treasury Secretary and USTR, which meant export controls are now on the table. The question is, how far will they go? In April, we saw Nvidia's H20 chips put on the export control list. Those were designed to be compliant with China's market. But we don't know, will they lift that? Will the Trump administration lift that? Are they going to go even further and unwind some of the Biden administration controls on advanced semiconductors, equipment? We saw loosening on electronic design software just in the last week or so. So there's a lot of room to work with. And the question is, what specific tools will be acceptable to the hawks in the Trump administration when China is eager to get sort of at this issue that has been front and center for them for a long time?
I know this is a hard one for you, Jason, but to single out a few of your members, AMD, Nvidia, they want access still to China. Do you think that's ever going to be something that they're managing to convince that they can do that safely?
There is a way to balance the national security interests that Sam made reference to with the economic interests of American companies. 95% of the people that live on the planet do not live in the United States. And if we deny American companies access to global markets, we're denying them the opportunity to really expand economically and succeed. There is a way, and the Trump administration has been moving in this direction, to make sure that the Chinese Communist Party doesn't get access to the most sensitive technology for its military purposes. The Biden administration tried this with the AI diffusion rule that you mentioned. They did it in a very poor way. They restricted access to our allies around the world getting access to American AI technology and semiconductor technology. That rule has been scrapped. We're moving forward and ensuring that we make a legitimate national security approach, not harbor that economic interest as well. In other words, we can't, in the name of national security, deny American companies access to the rest of the world. We can balance it correctly. We can make sure that those markets are open and accessible, but make sure that the national security interests are protected as well.
Sam, many would say that some of the moves on limiting copper, for example, into the United States is about national security in the longer term to make it more self-sufficient. But that takes decades. Just tell us about some of the certainty that's necessary. I think of rare earth elements, rare earth metals, so dependent on China. That's a big bargaining chip of China versus the US. But thus far, there hasn't been the sort of support coming necessary from the administration to allow us to mine it more in the United States. That certainty isn't there.
The thing about rare earths that everyone will say is they're not that rare, but they're really dirty and it will take a long time. And do we actually want those industries here? But certainly I think there's been an emphasis on reducing bottlenecks because these are choke points that can be weaponized against the United States. And Beijing realized that they'd stumbled upon an incredibly important choke point. Looking at where the negotiations stand right now and on rare earths specifically, when the two sides came back to the table, they said, we have a deal. I noticed two things from the Chinese side specifically on rare earths. One, they agreed that they were going to loosen their controls and speed up approvals, but they're only going to be granting licenses for 6 months at a time, which means Beijing wants to keep this in their back pocket as leverage. And the second is we've heard that U.S. companies in the process of applying for those approvals have been subject to very invasive questions from the Chinese government for sensitive business information. So we're not out of the woodwork yet, and I think it's yet to be seen what the Chinese government is willing to give on rare earths.
Very briefly, Jason, the other key bottleneck is talent. Have we got it here?
Yeah. So China is racing to deploy that AI talent. The Trump administration just last week announced a new AI education initiative that ITI and a number of our member companies signed on to develop the homegrown talent that we need. We also need to attract the best and the brightest from around the world. Most technology companies that we're familiar with were started by first or second generation immigrants, and we need that next generation of AI talent to happen here, to start their companies here, to stay here. So we need to attract them as students, and we also need to educate the workforce to make sure that we have the best AI talent here in the United States doing that invention, doing that creating and job descriptions that we want to see out there.
What a great conversation. Jason Oxman from the Information Technology Industry Council right here in New York, along with Sam Sachs from New America. It's been wonderful having you both. Thank you. Now coming up, Meta bets big on wearables, buying a minority stake in Eselor Luxottica, maker of Ray-Bans. That's next. This is Bloomberg Tech. Meta. It is investing $3.5 billion in Eselor Luxottica, purchasing a minority stake in the company as it boosts its AI glasses ambitions. It's all according to sources. For more, Bloomberg's Kurt Wagner joins us. You helped break this story. Basically, they are the maker of Ray-Bans and Oakleys that power the Meta AI story.
That's right. This is a company that Meta's been partnering with on the product side for several years now. You mentioned the Ray-Ban Meta glasses, the Oakley glasses that they just announced last month. So this is a company that's had a long relationship with, and actually this investment has been expected, but now it's final. And what I think it does, it ties these two companies together in a more formal way, but it also signals how much Meta continues to believe in this idea of AI glasses as the future, right? I mean, this is not a small investment. This is a sign that they are not only building these things, but that they're kind of putting their money where their mouth is here, and this is the future for them.
Yeah, they want to profit from the upside as well as they deepen that tie. Kurt, just pivoting to another AI story, and one is XAI, and just looking at X. I mean, how do you react to Linda Yaccarino saying she's no longer going to be CEO?
Yeah, well, I was surprised, not because we haven't been talking about this for a while, right? I think everyone's sort of been wondering how long she would last since she took the job 2 years ago. But I was just at Cannes Lions in the south of France a few weeks ago, and she was there. She was representing X. She was on stage. She was in meetings with partners and advertisers. And so I kind of thought that she would be around a little longer because of that. But look, this is a job that I've said from the beginning is incredibly hard, especially when Elon Musk is the owner of this company, because he does not do things that make selling advertising on X an easy proposition, right? So her whole job is to make X seem safe, brand friendly. And when you have, Musk out there doing the things that he tends to do, it is a tough gig. And so I'm not surprised that, 2 years in, she's decided to move on.
And 30 seconds, it's also hard when Grok, the chatbot, is doing the things it's been doing.
Sure.
Anti-Semitic commentary was what was reported yesterday, but they've got a big update tonight.
They do. There's a live stream tonight about Grok 4. You mentioned the timing of yesterday when Grok was spewing this really vitriolic stuff, anti-Semitism, things like that a lot of people took issue with. And so it'll be interesting to see how they address that, if they address that tonight on the live stream. But we're expecting that late tonight Pacific time.
Forever busy, Bloomberg's Kurt Wagner. Thanks for bringing us the story. Now that does it for this edition of Bloomberg Tech. Do not forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Tech.